As Eric Chng, Senior Managing Director for Global Alternatives at State Street, is here to talk us through the report. Eric, good to have you with us here in Singapore.
Thank you,
talk us through that report, this retail revolution. What is the big driver here?
Well, thanks for having me here, Martin, Christine. I think the retail revolution is a trend that we're seeing has been continuing because of the financial structuring and the innovation in the private market space. And I think a large part of this driver is to give people access. And there's a huge demand from investor type like retail, the mass affluent. And so I think this class of investors will continue to seek exposure into private markets in general. And a lot of intermediaries, right, and service providers are catering to this new wave of investment dollars.
Private market consists of private equity and private credit, right? Yeah. Now, private equity has always been a major asset, but private credit is fast gaining traction, is it not?
It is. Good question, and I think in the last 1 or 2 years, we've seen this huge exponential growth in private credit. Private equity is still the largest segment of the entire private market investing space, but we're seeing private credit gain more traction and interest, and that's just purely because of the risk-return adjusted profile. A lot of these private credit managers, they thrive on a lock-in of the yield and the spreads on floating structures. And so that is actually, in a way, if you think about it, inflation hedging. And so that attracted a lot of investor interest. We are continuing to see a lot of asset owners, they are continuing to allocate into private credit. It is the fastest growing space, although small, but gaining in traction.
Will it become a major investment strategy, the private credit space?
I think there are a lot of investors that will continue to focus on the investments into private credit, but we got to note that overall in the entire private market space, surpassing $18 trillion today, private credit is still a very small subsegment, but it's gaining. But it is entirely possible that this will continue alongside private equity because it's a complementary strategy.
So, Eric, let me ask you, obviously retail investors are attracted to private markets because of the returns, probably returns that they don't feel they're getting in public markets, for one, right? So private equity is one thing, and we've heard the way to access that is to fractionalize ownership, right? And therefore you spread the risk as well. With private credit, is that the same sort of way that you're hoping to get retail money involved in this by fractionalizing?
Yeah, I think the concept of fractionalization appeals to beyond just the high net worth, which can write bigger ticket sizes. As you reach out to the everyday retail investors, I think that fractionalization and tokenization as a concept that will continue to innovate in the space. But I would say generally, private credit as compared to other closed-ended nature of investments, they tend to be more liquid, the profile. So we call it a semi-liquid. And actually is quite well suited because if you have a more liquid window, you tend to attract more retail investors and give them access to it.
That's a good point because with private equity, which is still the bulk of private markets, right? That's not very liquid. It's very long lock-in. Depends on where and when you can actually get an exit, right? Whether it's an IPO or a trade sale or whatever. Private credit, though, more liquid, you're saying. So I appreciate that. What do you say, though, to folks that you meet on, and I know you travel a lot, yours is just back from, I think, Doha, right? Who've been considering getting into private credit, but from the research that they've done and some of the reading, et cetera, they go, Eric, look, the returns sound really good, really juicy, right? But I've been hearing about private credit being leverage upon leverage upon leverage, just extremely risky. What do you tell them?
Well, I think private credit is like if you look at public market and say, well, the entire public market is very over-leveraged, but then there are pockets. And so you should see, like in private credit, there are multiple strategies that managers would deploy. It is true that certain private credit strategies are extremely leveraged, but then in general, there are funds that are not as leveraged. So I think the key there is to pick the right level of exposure that suits your risk profile. And we certainly see a spectrum, right, on the different type of credit strategies. So if you look at special situations between asset-backed lending, their leverage ratios are very, very different.
Yeah, I mean, this is basically the next evolution of the next leg for private markets, is it not? Because, I mean, for a long time, it was basically the domain of big retail accounts, institutional money, right? Now, by trying to draw retail investors in, you're broadening the base, you're also democratizing access to private markets.
Yeah, I think that is a trend. it is an inevitable trend as the younger generation look to gaining more control of their investments, I would say. And that's the primary driver that we see this democratization of assets taking hold, right, and taking track. Obviously, I think, the institutional money will always play a very big, important part of private market. And bear in mind, as you rightly pointed out, Martin, a lot of private market assets are very long-term in nature. It's close-ended. And so retail investors coming in need to be prepared that their money could be locked up for a period of time. And so I think it is a financing mix, the retail, the mass affluent that we look and talk about. But I think over time, like most portfolio, for a asset manager, they're looking for a funding mix, reaching out to new investor classes to diversify. And on the investor allocation side, I think those strategic allocation will continue to flow into the private market side of the business.
Yeah. So let me ask you, target market for retail investors, right? You mentioned mass affluent, right? So these are the people with money, but not enough money that they can actually talk to a private bank, correct? Yeah. These people, don't they still need a certain amount of education, though? You mentioned the lock-in risk, right? That look, you pump in whatever your ticket size is, you may not see that money for quite a while, and that's one thing. And then also there's also the private credit side too.
Yeah, look, I think this to access the retail investor side of the space and the mass affluent, like you call out, you're right. I think that there's going to be an ongoing drive. A lot of the financial intermediaries that are coming to offer this exposure to this segment, they need to be aware of the risks involved and to be able to educate the end user of these products. Now we see that as an ongoing cycle. I think regulations will play a role across each of the market that these operators will be in, and it is, although inevitable, a trend, but it's got to be coupled with products that are well suited for the individual investor type. So I think that's going to be the driver.
To what extent is AI reshaping private markets? I'm just wondering. Everybody's talking about, how they're using AI for investment, how it's changing the fund management industry, asset allocation even. How is that reshaping private markets?
That's a very interesting question. I get asked a lot about it. I think AI and Gen AI, generally, I think it is a topic that people cannot ignore. Now, across the asset owner space, what we're seeing is that there is a lot of paper trail, a lot of manual processes involved in private markets. So I would say that a lot of exploratory kind of work has been done with regards to Gen AI on ingestion of those documents, being able to leverage this mass AI tool to interpret very, very disparate information sets. As you move into more infrastructure, real assets type of operating models, there are a lot of paper, a lot of manual work around. So that's one aspect of it. Now, the other aspect on the asset manager side that we see, Gen AI is continually an interest or a topic of interest by the more liquid part, looking at how AI can power algorithms a lot better, how asset manager can use valuations across very, very disparate asset classes, bring them all together into a centralized data taxonomy, and be able to then leverage this data to make better investment insights happen.
And speaking of better investments, before we let you go, Eric, are there certain verticals within private markets, private equity, private credit that offer opportunities to investors right now that you think you're bullish on?
Well, I think according to the recent annual survey, which is why I'm here today, on the State Street poll on private market, a couple of highlights there, right? I think the top 3 asset classes on the top of mind of strategic asset allocators, private equity, the biggest, you can't ignore. The second would be private credit, no surprises there. And then infrastructure will be the third, which is top of mind. About 67% of our investor that we poll cite these 3 equally important asset classes as where they put their money in the next 1-2 years. Also worth noting, I think hedge fund allocations are coming back over the last 12 months. We're seeing more than half of the investor trying to look at the macro risks and how do I attract near-term alpha or generate near-term alpha. And hedge fund strategies are one of the areas within alternative that they are very consciously looking into. So overall, I think the long-term trend of private markets continuing to grow, I think is here to stay. Short term, in terms of region, I think North America on the private equity space, continuing to be, well, it's big, but a lot of focus is on the valuations and the buyer-seller mismatch. But a lot of money now looking into Europe and into Asia as emerging area of investment.
Interesting stuff, Eric. Listen, thanks for dropping by. Great to talk, great value. Keep safe, safe travels, and come and see us again very soon.
Well, thank you very much for having me.
Pleasure
here.
is ours. All right, Eric Chng there from State Street, joining Christy and I live here at the SGX.